Something happened today that has never happened before in the entire history of Bitcoin. The director of the Federal Bureau of Investigation walked onto a stage in Las Vegas and declared in front of 40,000 people that the war on Bitcoin is over. And the man sitting next to him was the acting Attorney General of the United States. Think about what that sentence means. The two most powerful law enforcement figures in America, the men who command the FBI and the DOJ, chose to spend their Monday morning at a Bitcoin conference, not a courthouse. They did not come to arrest anyone. They came to announce a new era. This video is not about price. This video is about architecture. The architecture of institutional power shifting in a direction that markets have not yet priced. Stay with me, because what happened today in Las Vegas changes the map. To understand what ended today, you must first understand what existed before. For over a decade, the United States government treated Bitcoin as an enemy of the financial system. Prosecutors at the Department of Justice built a dedicated enforcement army, the National Cryptocurrency Enforcement Team, whose sole purpose was to hunt Bitcoin developers, crypto exchanges, and anyone who built tools that gave people financial privacy. The strategy had a name. It was called regulation by prosecution. Instead of writing clear laws, the government used criminal indictments as policy instruments. Developers who built privacy tools were arrested, tried, and sentenced to prison. And the message to the entire Bitcoin industry was unambiguous. Build here and we will destroy you. This was not a neutral posture. This was an active institutional war against the technology. And it worked for a time. Billions of dollars in Bitcoin development capital fled the United States to Switzerland, Singapore, El Salvador, and the United Arab Emirates. America was losing its position as the center of financial innovation, one prosecution at a time. The first crack appeared on the 7th of April, 2025. Todd Blanche, then serving as Deputy Attorney General, issued a 4-page memo to all DOJ staff with a title that left no room for interpretation: Ending Regulation by Prosecution. In that document, Blanche declared that the Department of Justice is not a digital assets regulator and disbanded the National Cryptocurrency Enforcement Team effective immediately. The language was surgical. He called the prior administration's approach a reckless strategy of regulation by prosecution, which was ill-conceived and poorly executed, and directed every federal prosecutor in the country to stop pursuing cases against crypto exchanges, Bitcoin mixers, and offline wallets for the behavior of their users. The enforcement focus would now be limited to individuals directly defrauding investors, not the infrastructure that Bitcoin runs on. The bear case must be stated. 6 Democratic senators wrote to Blanche within days, arguing the decision opened the door to money laundering, drug trafficking, and sanctions evasion at scale. A federal ethics watchdog formally investigated whether Blanche, who held between $159,000 and $485,000 in personal crypto at the time, violated conflict of interest laws by signing that memo. The policy shift was real, and so were the controversies surrounding it. If you've made it this far, you're not watching this like most people. You're paying attention to how power moves before headlines catch up. So, I'm curious, what city are you watching from right now? What time is it there? And what's the weather like today? Drop it in the comments. I read more of them than you think, especially from the people who stay for this part. Because the ones who understand institutional shifts early are usually the same ones who move earlier than everyone else. Now, let's talk about the second signal, the SEC changing sides. While the DOJ was dismantling its enforcement army, a parallel transformation was happening at the Securities and Exchange Commission. Paul Atkins, appointed in 2025, arrived with a mandate representing the sharpest reversal in the agency's modern history. His predecessor, Gary Gensler, had sued virtually every significant crypto company in America. Atkins arrived and announced a strategy called ACT, Advance, Clarify, and Transform. Under Project Crypto, the SEC built a 5-category taxonomy for digital assets, classifying 4 of the 5 categories as non-securities, a legal architecture that removed the majority of the crypto industry from the agency's enforcement reach. Atkins declared publicly that the SEC's persistent failure to provide clarity on digital asset classification was over, and called the right to control one's own Bitcoin private keys a foundational American value. Today, persons, for the first time in the history of the Bitcoin conference, a sitting SEC chairman walked onto that stage in Las Vegas. No SEC chairman had ever done this, not once in 15 years of Bitcoin conferences. Paul Atkins, standing on that stage, is not a symbolic gesture. It is a documented institutional commitment, recorded in the SEC's own official calendar, live-streamed to 40,000 attendees and millions of viewers worldwide. And then there's the third signal, the one that markets noticed first, even if they do not yet understand why it matters. This morning, Strategy announced the acquisition of 3,273 Bitcoin for approximately $255 million. This single purchase brought Strategy's total holdings to 818,334 BTC, more Bitcoin than any other public company on Earth. Consider the timing. Saylor did not buy this Bitcoin last week. He did not buy it last month. He bought it today, on the same morning that the FBI director and the Attorney General of the United States stood on a Bitcoin stage and declared the war finished. Either this is the most extraordinary coincidence in the history of financial markets, or Saylor is reading the same institutional signals that this video is mapping, and deploying capital accordingly. The bear case is essential here. Saylor has been buying Bitcoin at every price level through every regulatory threat, with an average cost basis of $75,537 per Bitcoin. His conviction is not evidence that he is correct. It is evidence that he is committed, which are two different things. If Bitcoin were to fall significantly below that cost basis and remain there, the structural risks to Strategy's balance sheet would be severe. There is a discipline in geopolitical analysis called convergence mapping, the study of moments when multiple independent institutional signals align in the same direction simultaneously. Single signals are noise. Paired signals are correlation. Three independent signals from three separate branches of institutional power converging on the same day is what analysts call a structural event. Today, we have exactly that. The executive branch law enforcement apparatus, the FBI and DOJ, formally ended its adversarial posture toward Bitcoin. The financial regulatory apparatus, the SEC, formally abandoned regulation by enforcement and is now building a legal architecture that legitimizes Bitcoin as a core American asset. And the most aggressive private institutional accumulator in history deployed $255 million into that same asset this morning. These three actors do not coordinate. They do not share calendars. The FBI does not call Saylor before making enforcement decisions. What connects them is not conspiracy. It is convergence. And when three independent centers of institutional power reach the same conclusion at the same time, the question worth asking is not whether they are coordinating. It is, what do they all see that the broader market has not yet priced? While Las Vegas was making history, a quieter but equally important number was printing in the background. Spot Bitcoin ETFs recorded $824 million in net inflows for the week ending April 24th, the fourth consecutive week of positive flows. Cumulative net flows across all U.S. spot Bitcoin ETFs now sit near $58 billion, within striking distance of the all-time peak of $62.8 billion. This number matters for a reason that has nothing to do with short-term price. Institutional allocators, the wealth managers, pension funds, and registered investment advisors who collectively manage trillions of dollars in client assets, remain below 0.5% allocated to crypto. The channel through which that allocation grows is the ETF. And the ETF channel only opens fully when the regulatory environment is stable enough for compliance officers to approve it. What the SEC did today in Las Vegas is not just a speech. It is a compliance signal to every institutional desk in America that the regulatory environment has stabilized. The bear case, ETF inflows can reverse, and have reversed sharply before, particularly during geopolitical stress events. $824 million in weekly inflows is not a structural floor. It is a data point. Let us return to Las Vegas and be precise about what was said. The session title was not ambiguous. It was called Code is Free Speech, Ending the War on Bitcoin. FBI Director Kash Patel sat on that stage alongside Acting Attorney General Todd Blanche, moderated by Coinbase's Chief Legal Officer Paul Grewal, a former federal magistrate judge who has spent years negotiating the legal boundaries of crypto regulation. Patel's presence carries a specific institutional weight that goes beyond symbolism. He was confirmed as FBI Director by the United States Senate in February 2025 and has publicly disclosed personal holdings in Bitcoin ETFs and in Bitcoin Miner Core Scientific. The head of America's foremost federal law enforcement agency is himself a Bitcoin investor, and he chose to spend his first public conference appearance at an event titled Ending the War on Bitcoin. The bear case is important here. Critics argue that officials with personal crypto holdings making policy decisions that benefit crypto represent conflicts of interest, not endorsements. Democratic lawmakers have made exactly this argument about both Patel and Blanche. The question of whether these officials are acting in the public interest or their own financial interest is a legitimate one, and it is a question that could, if pursued through Congress or the courts, reverse elements of the policy shift we are documenting today. Behind all of this activity sits a legislative framework being quietly assembled in the United States Congress. Senator Cynthia Lummis, who was also on that Las Vegas stage today, is the architect of two foundational pieces of legislation. The Bitcoin Act, which proposes establishing a U.S. strategic Bitcoin reserve of up to 1 million BTC, and the Clarity Act, which aims to provide the definitive regulatory framework for the entire digital asset industry. The Genius Act, which established the first federal stablecoin law ever enacted in American history, was co-authored by Lummis and has already passed into law. This is not a senator making speeches. This is a senator with a documented record of converting Bitcoin policy proposals into binding American law. The institutional architecture being built in Washington is not aspirational. It is operational. The bear case. The Clarity Act has not yet passed, and the Bitcoin Act has not yet passed. Legislative timelines in the United States are unpredictable. A change in congressional priorities, a political scandal, or a major Bitcoin market event could stall or reverse this legislative momentum entirely. The gap between a senator standing on a stage in Las Vegas and a bill becoming law is measured in years and votes, not days and speeches. While the legislative framework is still being built, the executive branch has already moved. President Trump signed an executive order authorizing the creation of a strategic Bitcoin and digital assets reserve, a formal acknowledgement that the United States government views Bitcoin as a reserve asset worth holding at the sovereign level. The U.S. government currently holds approximately 300,000 BTC, accumulated primarily through asset seizures in criminal cases. The strategic reserve concept has no historical precedent in Bitcoin's existence. When a sovereign government formally designates an asset as a reserve, placing it alongside gold and foreign currencies on its balance sheet, it changes the legal and fiduciary calculus for every other sovereign, central bank, and institutional allocator in the world. Japan's Metaplanet, which now ranks as the third largest public corporate Bitcoin holder on Earth, has explicitly modeled its strategy on the United States government's posture. The bear case is structural. A strategic reserve established by executive order can be unwound by executive order. The reserve has no legislative protection yet. It exists at the pleasure of the current administration. A change in the White House, a major Bitcoin market crash, or a geopolitical event requiring rapid liquidation of sovereign assets could dissolve this reserve without any congressional vote required. Executive orders are policy. They are not law. Let us step back from the politics and look at the raw data. Spot Bitcoin ETFs accumulated $18.7 billion in net inflows during the first quarter of 2026 alone, putting the year on pace to exceed both 2024 and 2025 if the trajectory holds. BlackRock's IBIT now holds over 773,000 BTC and commands approximately $54 billion in assets under management, representing close to 49% of the entire U.S. spot Bitcoin ETF market. The demand side of this equation is being met by a supply side that is structurally constrained. Since the April 2024 halving, miners produce approximately 450 new Bitcoin per day, roughly 164,000 per year. Bitwise has projected that U.S.-listed Bitcoin ETFs could purchase more than 100% of all new Bitcoin issuance in 2026. If that projection holds, the market is absorbing institutional demand that structurally exceeds new supply for the first time in Bitcoin's history. The bear case on supply and demand: projections are not guarantees. The market has demonstrated it can generate significant outflows when fear overtakes institutional conviction. ETF flows reversed sharply during the correction from the all-time high of $126,198, reached on the 6th of October, 2025. The structural demand floor is only as durable as the institutional commitment behind it. Here is what the full picture looks like when mapped as a single coherent structure. The law enforcement infrastructure that criminalized Bitcoin development has been formally dismantled. The regulatory infrastructure that used securities law as a weapon against Bitcoin companies has been formally replaced with a framework that legitimizes the asset. The legislative infrastructure that would make these changes permanent is advancing in both chambers of Congress. The sovereign infrastructure, the U.S. government's own Bitcoin reserve, has been formally established by executive order. And while all of this was happening at the institutional level, private capital accelerated. Saylor bought $255 million of Bitcoin this morning. ETFs absorbed $824 million last week. BlackRock holds more Bitcoin than most sovereign nations. The convergence is not between the government and one company. It is between law enforcement, financial regulators, legislators, and every major institutional allocator, moving in the same direction at the same time. The honest answer to the question this video began with is this: no one can tell you what happens to the price. What this analysis tells you is what happens to the architecture. When compliance officers at wealth management firms can approve Bitcoin allocations without regulatory ambiguity, when sovereign governments hold it on their balance sheets, when the FBI director calls it free speech, the universe of capital that can legally flow into the asset expands by an order of magnitude. Whether that capital arrives tomorrow, next quarter, or in 2 years is a question the market will answer. That it is coming is no longer a question of if, it is a question of when. Today was a day that will be studied in financial history courses 20 years from now. Not because of the price, not because of any single announcement, but because 3 independent branches of American institutional power law enforcement, financial regulation, and private capital converged on a single asset on a single morning and declared, each in their own language, that Bitcoin has crossed a threshold from which there is no institutional retreat. The three signals documented in this video are verifiable, sourced, and on the public record. The FBI director sat on that stage. The SEC chairman's appearance is listed on the SEC's own official calendar. Strategy's purchase was filed this morning. These are not interpretations. They are facts. What you do with those facts is your decision. If you found this analysis useful, subscribe to this channel, because the next 2 days of Bitcoin 2026 will generate more institutional signals than any other period in 2026, and we will be here to map every one of them. The conference runs through the 29th of April. We will not miss a session.